Hey everybody, welcome to the show. Today we're going to talk about income management. What's income and what's not, and give you a little information on sales tax. Hey, I'm Karen. I'm a former CPA, entrepreneur, business consultant with big ideas, and I'm the mom.
I'm Cadie. I'm a payroll specialist, business owner, and detail-oriented person that makes things happen, and I'm the daughter. Welcome to Cheers to Business.
Hey, Cadie, this is part 2 in our short knowledge nugget series. There's a lot of different ways that income can come into your business. There's different streams. You can loan it money. You can make money, which is revenue. That's income. You can get loans from the bank, but when you deposit that, that's not income. So don't let anybody pick that up as income and then you get taxed on it. You can get revenue from your sales or services. Does your business provide a widget, a product, or do you provide a service for someone? You can also have interest income come in. If you're lucky enough to make enough revenue income to be able to have a savings account, you got interest income. Or you can own something and you have rental income. That's actually called passive income. That's a little deep for our short nuggets series that we're doing right now. But if you own a building and you're renting it out, that is rental income and that is taxable. And you get to take off the depreciation and the interest expense on the building. So what's not income? That's loans that are being made to you or to your business in order for capital to help it grow. Don't let anybody tax you on that. You may have to put some money out of your personal account. I've seen people have to take money out of retirement. If you take money out of retirement, yes, it's never been taxed, and you put it in your business, I know you'll owe the tax personally. It's actually a loan to your business. And I'm kind of stretching right now because I do want to keep this short today. But not everything going into your bank account should be considered income. All right?
Someone comes to you, they have a business, like either, I guess, their income is way higher than they knew, or maybe it's not as good as they thought. They have accounts receivables, all that.
How many times over the years did I call somebody and go, hey, you owe this many thousands of dollars in tax?
So I think you should run with that scenario.
Okay. All right. So how many times over the years did somebody come to me and go, number one, you're crazy. Number two, why do I owe so much tax? I said, well, you had this much in income. No, I didn't. Well, that's what went into your bank account. Well, I had to loan it $10,000 3 different times. Well, you didn't tell me that, number one. So money being loaned to your company, whether it's coming from a bank or coming from you, that's not taxable income. You didn't make that money. You just transferred it from one pocket of your pants to the other pocket of your pants. It's still your pants. And so, don't consider that income. Well, on the other side of that, people go, well, I spent this much paying back this loan. Well, if you didn't tax it coming in, you can't deduct it going out. And so know that loans coming into your business are not income. Don't let somebody pick them up, but you have to tell them. They can't read your mind. On that bank statement, it doesn't say this is a loan from the business owner. It just says deposit.
And classify it in your bookkeeping software.
Please get some kind of bookkeeping software. And, code it as a loan. Same thing, loan payments don't go they're not an expense of your company. They're it's making your cash flow negative. But if you had not gotten that money in to be able to make whatever you make or service whatever you service, then you wouldn't make any money to be able to pay the loan back. So I guess the lesson of today's series of knowing your income is, one, identify the different sources. Is it a loan? Is it money that you made? Is it income? Is it interest income? Are you renting something? Knowing the different types of revenue streams that you have so that you can identify them. One, to save on taxes, so you don't muck up and pay tax on money that you just loaned yourself, because when you pay it back, you're not going to be able to deduct it again anyway. The wisest thing I ever heard about sales tax was actually an agent for the state sales tax office. And that person said, sales tax is not your money. If you think about it, you're collecting it from other people, you're holding it. It's just because you pay it the following month after. For example, all your sales in December, you're going to pay that sales that you collect in that month is going to be paid by the 20th of January. So on the 20th of every month, you have had to pay your sales tax in for what you collected for the month before. But when you go into a store and it's $100 and here's sales tax 10%, then you're giving them $110. That $10 is not Walmart's. It's not your local business owners. They're holding it until it's time to pay it in on the 20th of the next month. So when you have to write that check, it just hurts the cash flow because it's a whole month's worth of sales tax. So you have to add all that up, and writing that check at one time, it depletes your cash flow. So it's like, well, this isn't fair. Well, it was never your money. And so, change your perspective on sales tax. Yeah, it's too high. Yeah, I don't like paying it. Yeah, everything, nobody likes it at all. But don't discount the sales tax. Another lesson on sales tax is when you sell something for $35 and then you're filling out your sales tax reports, don't put your sales are $35. Why? Because if you only collected $35 from your customer, where's the sales tax that you're going to do the math on? So if your sales tax states 4%. So if you do 4% times $35 and pay it, you never got that from your customer because you only got $35. So lesson for today, wise lesson, is take your sales price. If you're not adding it on at the end of your invoice and you're just charging a flat amount, but you're paying the sales tax in, then take your sales, that $35 in this example, divide it by 1 point your sales tax rate. For example, here is 1.1. If you do that, it's going to back out the sales tax to give you your true sales figure to put on your sales tax forms. Sales tax lesson number 3. If you are selling products and you are getting a bunch of different products and combining it into one new product that you're charging sales tax on, don't pay sales tax when you buy all those. A really good example is, let's say you're making cakes. When you buy your flour, get you a sales tax. Every state has them. You can just see your Secretary of State, Department of Revenue for whatever state you're in. Contact them and say, I'm charging sales tax on my end product, but I'm buying 2, 4, 15 different products. Don't pay sales tax when you buy those because only the end user pays the sales tax. For example, think of a pack of gum, whether it's the grocery store, Walmart, wherever. So you get all the product to make the gum. Then you got the wrappers. Then it goes to Wrigley or whatever. So you got the gum people, but then it goes to a distributorship, and then it goes somewhere else probably. Then it goes to the Walmart stores. I know it's complicated. So nobody has paid sales tax on all of this big, long, drawn-out, boring process until it gets to us. And when we pay sales tax in the grocery store, in the compact, in the Walmart, in the whatever, then that's the end user pays sales tax. And that's what sales tax is based on. Only the end user pays. Oh, there's 2 more things on sales tax. 1, Alabama is one of 7 states that divides it up by locality. Meaning Mississippi just has 1 flat 7% sales tax all over. Alabama, you have every city, every county, and then you have the state. State of Alabama is 4%, but it doesn't tax services. So if you're providing a service for someone, doctor, lawyer, CPA, bookkeeping service, payroll company, then you are not charging sales tax on your service. But word of warning, if you cross state line over to Mississippi and you're providing a service to someone, Mississippi wants their share of it. Mississippi charges sales tax on service. I know that Texas charges sales tax on some services, but not all. So before you open up a business or reach out into the other states, make sure you are fully aware of how that state works and what it charges sales tax on and what it doesn't. Cheers to understanding how sales tax affects your business.
Cheers to knowledge.
And if you don't understand, reach out, because I guarantee you the agents who work the sales tax, they'd rather answer your question and help you through. You can always call with a hypothetical question.
Please be sure to subscribe to Cheers to Business podcast on iTunes or anywhere else that you get your podcast. Visit our Facebook and be sure to give us a like. And if you have any questions or topics you'd like us to discuss, shoot us an email from the website cheerstobusiness.com.